All right, so here we're looking at this is Jan 2016. We have, just to make this slightly bigger. Cassie and Casey entered into a partnership on the 1st of January 2015. Right, the capital invested by Cassie was $142,000. Drawings made during the year was $25,000. Casey did $128,000 as a capital investment, and the drawings made during the year was $22,000. The partners agreed that each partner should receive interest on capital at 10% per annum. That's an important piece of information that we'll need when we're doing our working. Right? Interest on drawings, another important piece of information. So we're underlining these things because we're going to use these to work out when we're doing our working. Casey's to receive an annual salary. So Casey's getting a salary. Let's make a note of that. 25,000. Profits and losses are to be shared in a ratio of 3:2. Right? 3 going to Cassie and 2 going to Casey. The following additional information is available. The partnership made a net income of $55,000 during the year, ended 31st December 2015. They want us to provide a profit and loss appropriation account for Part A, and then for Part B, we're going to use a column-off style of the current account and explain the significance of the balance of each partner's current account. So let's begin with Part A, right? I'm going to do Part A right here. Always let us begin with our working first. So it's important for us to have a good memory or recollection of the format of our appropriation account, right? We need to start with our net profit, add our interest on drawings, subtract interest on capital, subtract salaries. That's going to give us our appropriated net profit. And then we go to the share profits. So with that in mind, you start your working by itemizing these figures and making sure you have the correct figures for each of these. So we'll start with the net profit. The net profit from the question is given as 55,000. Next, we're going to go to our interest on drawings. All right, now we need to do this for 2 partners, so I would usually name them Cassie and Casey. Now, the interest on drawings is said to be at 7% per annum. And the drawings made by Cassie is 25,000. So I'll make a note of that here, and we're going to work those figures out. The other person is 22. Casey is 22,000. Right, so somewhere in your booklet at the side or maybe on the back of that particular page, you want to do your working so that when you start to actually write up the appropriation account, it's easy to just draw on these figures. Right, 25,000 by 0.07, 1750. Now, you don't want to spend too much of time doing this, right? So you want to be to the point. That's why it's very important for you to know your format, so you know exactly what it is you're looking for. Right, so this is 1540. So these are my interest on drawings figures. Next, we need interest on capital. So we go in with our flow quickly. Cassie, Casey, and we're doing this at 10% per annum. So 10% by Cassie's 142,000. Right, so that's going to work out to be 14,200. And Casey is going to be 128,000. So that's 12,800. Right. Salary is the other thing, very important. So just make a little note of it here. Salaries for Casey. And this amount is 25,000. Now, as you do this, you might just want to quickly tick off so that you know you completed this, right? The only thing left to do, we put asterisk here. We need to use this when we do our appropriation account. So having this information now, let's get to the profit and loss appropriation account. So I'm going to do that right here. Name of the partners, Cassie and Casey. They want the profit and loss appropriation account. So I'm going to label it just as that. Right, we go with 2 columns again. Net profit. So our net profit figure is 55,000. Put that in our last column. Going straight to add in our interest on drawings. Cassie, we're gonna put our 7%. Cassie 7% by 25,000. So you could just show this as a bracket and you're working, right? That's gonna be 1750. And then Casey, 7% of 22,000. That's 1540. Finally, sum of these two figures. So that's what? 90, 12, 2, 3. Bring that figure down. 8, 5. And then you're moving on to your interest on capital. So you're paying this out to the partners, all right? So it's going to decrease. It's being paid out of your net profit. So when you're doing the appropriation account, you're thinking about things that's going to increase the net profit or decrease the net profit. Interest on drawings increases the net profit, right? Because the partners are paying this to the partnership. The interest on capital, on the other hand, is being paid out to the partners from the net profit. So that's decreasing it. So 10% by 142,000 and 10% of 128. Right, so you put in your figures here. 14,200 and 12,800. Remember, this is subtracting, right? So the total figure here is going to be 2 and 8 is 10, 6, 7, 27,000. And then there's a salary for Casey. Because Casey is the only person getting a salary, I'm just going to move this to this end one time, 25,000. So that 58,000 $290. I'm subtracting 27,000 from it, followed by 25,000 from it. So I am remaining with $6,290. We could annotate this as our appropriated net profit. And this is what we're going to share amongst the partners. So share profits now. So we have Cassie and Casey. If we go back to our question, the profit and loss sharing ratios are 3 to 2. Now the sum of the parts, 3 plus 2 is 5. So it means, therefore, that KC is getting 3/5 and Cassie, sorry, is getting 3/5 and KC is getting 2/5 of this 6290. Right? So what we could do simply is just divide the 6290 by 5, multiply by 3, that's 3,774. And then if we multiply that by 2, 2516. So you're showing each individual share profit, and then you're showing the total matching back to your appropriated net profit. And this is the appropriation account for KC and Cassie. Right? Now, the other part of the question is asking us to prepare the partnerships or partners' current account in a column style. I'm going to go down a bit. Right? So this is the style we're going to use. We're going to have current accounts, one column for Cassie and another one for KC. Right? These are dollar amounts going here. Now, the question didn't provide us with any current account balances. Right? They started on the 1st of January 2015. It is now December 31st, 2015. So this is the first time we're going to be doing the current account for them. So there are no opening balances for the current account. So we could begin with our income generating activities in the partnership for each partner. So that would include interest on capital, salaries, and share profits. These are things that will increase the partner's standing or net worth in the business. The information for these will be calculated or taken from our appropriation account. So the interest on capital for each of these was 14,200 and 12,800. So 14,200 and 12,800. Salaries went to KC in the amount of 25,000. 25,000. No salary for Cassie. And then share profits was 3774, 2516. 3774, 2516. So these are all positive increments or things that are going to increase the partner standing. So they're all positive. I'm going to add. All right. Let's just grab the calculator quickly. And have 14,200 plus 37,4. 17,974. $12,800 plus 25,000 plus 2516, 40,316. Now, from these, we need to subtract things like drawings and interest on drawings. These are things that will reduce their earnings in the partnership. So let's just double check. Our drawings was 25,000, 22,000. And our interest on drawings was 1750, 1540. Now these are both for all negative figures, so I'm using brackets to signify that. Right, so grabbing the calculator again, we're doing 17,974 minus 25,000 minus 1750. Negative 8776. All right, and then next we have 40,000 minus 22,000 minus 1540, 16,460. No, these are the closing balances. I'm gonna put a little asterisk here, right? Because for Cassie, there's a negative balance. Explain the significance of the balance on each partner's current account. So Cassie has a negative current account balance, which indicates that they are withdrawing more than they are earning in the partnership. Right? So if we look at her earnings, she earned 17,974, but she borrowed a total of 25,000 and had to pay an interest of 1750. So 26,750, and gives us a total of 8,776 in excess of what she's made for the year in the business. Right? On the other hand, Casey, sorry, is in good standing. As her account, assuming it's her account balance, or current account balance rather, is positive, indicating that she has earned more than they would do during the period. Yeah? So that's the difference between the two, right? Now, usually a negative balance can be shown as a debit closing balance if we did a horizontal style current account, and this will be shown as a credit closing balance. This is the more favored outcome, credit balances, right? We don't want to see these debit balances because that's not beneficial to the partnership. Yeah. And that concludes this question.